Imagine flushing 30% of your income down the drain. Shocking, isn't it? Yet that's precisely what most of us do unintentionally every single day. The silent financial drain, a phenomenon that occurs when ordinary people like us unknowingly let a significant portion of our hard-earned income slip through our fingers. It's not about the major expenses or the occasional splurges. It's about the habitual spending patterns and financial choices that make us wonder at the end of the month where all our money went. This isn't about blame or guilt, it's about awareness and change. It's about understanding the common financial pitfalls, especially those that tend to ensnare individuals with limited resources, and providing a roadmap for more prudent choices. It's about long-term wealth building and financial independence. So let's delve into the 7 areas where your money might be silently slipping away. First up, the dreaded high-interest debt, a silent killer of financial stability. High-interest debt, such as credit card debt, can quietly eat away at your financial health. It's like a parasite slowly draining your resources, often without you even noticing until it's too late. You see, when you're stuck in the cycle of high-interest debt, you're not just paying back what you owe, you're also paying a premium for the privilege of owing money. This premium, in the form of high interest, can quickly add up, making your original debt balloon out of control. And here's the worst part, the money you're spending on high-interest debt isn't working for you. It's not growing in a savings account or being invested in assets that could appreciate over time. Instead, it's going straight into the pockets of lenders. So, how can you break free from this trap? Start by paying off your highest interest debts first. This strategy, known as the avalanche method, can help you reduce the amount of interest you pay over time. Remember, not all debt is bad, but high-interest debt? That's a wealth destroyer. Next, we have the luxury brand trap. Is that designer label really worth it? Let's delve in. It's easy to fall into the allure of luxury brands. Their glitz, their glamour, their promise of quality, but often people pay exorbitant prices for these brands, not for the product itself, but for the name attached to it. Consider this. The true value of a product lies in its utility, durability, and how much you, as the consumer, value it, not in its logo. By prioritizing value over brand names, you can unlock significant savings, which can then be directed towards wealth building and financial independence. Remember, it's not about denying yourself the finer things in life, but about making smart, informed decisions about where your hard-earned money goes, because at the end of the day, a brand doesn't define you. Your financial independence does. Ever thought about the real cost of owning a new car? Let's take a closer look. The allure of a shiny new vehicle can be hard to resist. But have you ever considered the financial impact of this purchase? New cars depreciate rapidly, losing around 20% of their value the moment they're driven off the lot. And in the first 5 years, this figure can skyrocket to a staggering 60%. This translates to thousands of your hard-earned dollars disappearing into thin air. But what if you opt for an economical vehicle instead? A reliable pre-owned car, perhaps? Not only does it cost less up front, but its depreciation curve is also much gentler. This decision could lead to substantial savings, money that could be invested wisely elsewhere. Remember, the primary function of a car is to get you from point A to point B. Don't let the allure of a new car drive your wealth away. A car should serve your needs, not drain your resources. So the next time you're tempted by that new car smell, think again. Your wallet will thank you. A car is to get you from point A to point B. Don't let it drive your wealth away. Fancy dining out, you might want to reconsider. The allure of convenience and the luxury of being served can often make dining out an attractive option. But have you ever paused to think about the cost of this habit? Regular dining out can substantially contribute to your monthly expenditure. Now, let's consider an alternative. Cooking at home. Not only does this provide an opportunity to control what goes into your meals, but it also offers significant savings. A meal that costs $50 at a restaurant could potentially be prepared at home for as little as $15. That's a potential saving of over 70%. The savings become even more substantial when you multiply this by the number of times you dine out in a month. And over a year, you could be looking at a significant addition to your savings or investment fund. Enjoy your food, but don't let it eat into your wealth. Lottery tickets and gambling, the illusion of quick riches. This is the 6th pitfall many fall into. The lure of the jackpot, the promise of instant wealth. It's a seductive illusion, isn't it? The possibility of turning a few pounds into millions with a single scratch or a spin of the roulette wheel. But let's look at the cold, hard facts. The odds of winning a lottery are astronomically low, often less than 1 in several million. Gambling, too, is a game of chance where the house always has the edge. These are not investments, but rather drains on your resources. Every pound spent on lottery tickets or at the casino is a pound that could have been put towards a legitimate investment, earning compound interest over time. So instead of chasing the illusion of quick riches, focus on informed investing. Study the markets, understand the trends, and make calculated decisions. It may not offer the thrill of a lottery win, but it's a far more reliable path to financial success. Remember, wealth is not built overnight, but rather through steady, informed investments over time. Informed investing, not gambling, is the key to financial success. Tempted by that new smartphone release? Think twice. We are living in a world where technology is evolving at a rapid pace. Every few months, there's a new gadget on the market promising improved performance, sleeker design, or some groundbreaking feature. It's easy to get swept up in the excitement and feel the urge to upgrade, but let's pause and consider the financial implications. Constantly upgrading to the latest gadget is a costly habit. Every upgrade is a significant chunk of money that could be invested elsewhere, growing your wealth over time. It's not just the upfront cost of the gadget, but also the hidden expenses like accessories, increased data usage, and potential repair costs. Remember, the value of a gadget depreciates quickly. That shiny new device will lose its luster and value in a matter of months. Meanwhile, the money you could have saved or invested will continue to grow. So before you rush to upgrade, ask yourself, is this purchase really necessary? Can your current device still serve its purpose? If the answer is yes, resist the temptation. Don't let the latest gadget downgrade your wealth. Finally, the allure of get-rich-quick schemes, but at what cost? The glittering promise of wealth without work, fortunes made in a flash, can be tempting indeed, yet beneath the surface, these schemes are often nothing more than mirages of prosperity, leading individuals down a path of financial loss rather than gain. These schemes are in essence a gamble. They bet on chance rather than on sound financial strategy. Often they involve significant upfront investments with the expectation of exponential returns. However, the reality is that they often lead to substantial losses, leaving individuals in a worse financial position than they were before. It's crucial to understand that there's no shortcut to wealth. True wealth is built on the foundation of informed investing, disciplined saving, and prudent financial choices. It's about understanding the value of money and the power of compound interest. It's about investing in yourself, in your knowledge, and in your skills. So resist the lure of get-rich-quick schemes. They're not a road to wealth, but a path to financial ruin. Remember, wealth isn't built overnight, it's a journey of prudent financial choices. To summarize, financial waste is often hidden in plain sight. We've taken a journey through 7 common areas where financial resources often trickle away unnoticed. High-interest debt, luxury brands, new cars, frequent dining out, lottery tickets and gambling, constant gadget upgrades, and falling for get-rich-quick schemes. These are the 7 financial pitfalls that many of us often unknowingly stumble into. In the world of high-interest debt, remember that the faster you pay it off, the less you'll owe. The luxury brand trap is all about understanding that value and quality do not always equate to a high price tag. When it comes to new cars, it's about distinguishing between wants and needs and realizing that a car's value depreciates the moment it leaves the lot. Dining out can be a wonderful treat, but when it becomes a routine rather than a luxury, the costs add up. Lottery tickets and gambling, on the other hand, often promise a quick financial fix, but are rarely a winning strategy. Constant gadget upgrades can also bleed your wallet dry, with the latest tech often offering little more than a status symbol. And lastly, get-rich-quick schemes. They are just that, schemes. Real wealth is built over time through sound financial decisions and consistent savings and investments. The key to avoiding these pitfalls lies in making mindful financial decisions. It's about understanding your financial habits, identifying your weaknesses, and consciously choosing to make better financial decisions. It's about learning to prioritize long-term financial health over short-term desires and instant gratification. Remember, every penny saved is a penny earned. Start making smarter financial choices today for a wealthier tomorrow.